Okay, guys, welcome. It's Sunday, August 29th. My name is Dave Coker, and this is, of course, talking about finance. Let's start out, as we do, by looking at the S&P 500 from last week, and wow, looks like boom times again. This makes sense. In spite of fears about the Fed, I think we all know they aren't going to do nothing that isn't communicated well in advance, given the state of equities and pretty much every asset that we can take a look at. And given that corporate earnings are still very strong and seem to be getting stronger, I do think we're going to see some upside, and perhaps significant upside, to equities before it all ends in tears, because it definitely will, right? And that's why you want to make sure you've got clean investments and intangible companies, not these fantasy companies. But regardless, let's get a look at what we got here. We can see a little weakness in Microsoft, but aside from that, tech performed pretty well last week. Communication services, Facebook, Google did very well also. Healthcare, we got whacked a little bit, but that makes sense because if you recall from last week, we saw a huge run up in healthcare stocks, pharmaceuticals, drug makers. Once news came out that boosters were going to have to be administered every 6 months, my God, what an annuity stream they've got cooked up there. It's absolutely incredible. Other areas perform pretty well: consumer cyclicals, finances, industrials, sort of mixed on that side, and energy. So let's see. I think we're going to have some more upside to equities. The VIX is still trading below 19, which is its long run mean. So hey, let the good times roll and buy stocks. And speaking of stocks, I've mentioned this several times on this podcast, or this video rather. I'm sorry, that I advise people against trying to trade. It seems everybody's a trader these days, and I really just sort of snicker internally when somebody tells me they're a trader and they trade. They never tell you when they bought a stock. You always hear about it in retrospect. Yeah, I took profits. It took profits. They never lose money. It's absolutely amazing, some of these people. It doesn't work. It's basically BS, to be totally honest with you. Again, that's not my opinion. That's fact. We've got the data from America's tax service, the Internal Revenue Service, and we know that 95% of people who trade break even or lose money. And of the remaining 5%, a very, very small percentage make money in such a way that they can quit their day job. Oh, and guess what? It's rare for those people to be able to do that more than 3 to 5 years in a row. It just doesn't work, right? So you just got to buy and hold. And that strategy would have worked really, really well for these stocks here. So we got Amazon, Microsoft, Facebook, and Apple, and it worked over the past 10 years. It's absolutely incredible. You can see the performances. Yeah, it's really amazing. 1,600% return in Amazon alone. So will it continue to work? Well, here's the thing, guys. I don't own any of these stocks because they either don't pay dividends or they pay crappy dividends. Hello, Apple. So I don't really like these companies. I only like companies that pay dividends. But if this is the kind of thing you're into, you'll be into this. So just buy them and hold them. And I think we're going to still see good upside in stocks in general and tech specifically because societies are changing to reflect work from home. That's true of most of the Western democracies and the United States. But speaking of America, guys, you just don't want to get sick there. As I always tell people, yeah, America, it's a different country than the rest of the G7 or even the broader G20. It's a very unusual place compared to European norms of behavior in society. And the entire system, as I mentioned before, is skewed towards the accumulation of wealth. So people can and often do get fiendishly rich there. But you just don't want to get sick here. This is a really fascinating one. One of my friends pumped it up and we were talking about it for a while. Horizontally, we got healthcare spending, left to right, lower to the left, to the right is higher. And then vertically, we got healthcare performance. And it's interesting, guys. Check this out. Look at where America is. You've got, and I've mentioned this before, you've got the highest rate of healthcare spending and the worst outcome. This is from the G10, I believe. It's absolutely amazing. And people, complain about the NHS. I think they do a wonderful job compared to the mess that we've got in the States. It's like the Hunger Games over there. It really is. But look at where the UK is. And really, you got to look at the Nordic countries, or even the Netherlands does pretty well to best the UK's performance. It's really interesting. So you really don't want to get sick in America. And I don't think you really want to need a house either. This is good. This is off calculated risk. I don't look at this guy's blog, but one of my buddies did, and we, pumped it into the Telegram channel and we started talking about it. Really fascinating. What we're doing is we're going back 20 years, and you can see the size of the market in terms of sales price, new home sales price. The thing that is really striking, guys, if you look on the right, if you got less than 200 for a house, you ain't getting no new home in the States. It's really wild. And if you look on the left-hand side, the other side, going back 20 years ago, over half, the majority of homes cost less than $200,000. Another thing that's striking is take a look at the top. And I really apologize. I'm not really into these colors. I guess you would call it purple. I think it's purple, but somebody would correct me and say it's fuchsia or some oddball thing like that. I don't know. But in any case, the top of the chart, and it is purple now I'm looking at it, but regardless, the top of the chart reflects $500,000 plus homes, and that is booming. That's amazing. And once again, guys, if you haven't been to the States, go up on images.google.com and pick out or take a look at some big American houses, right? I'm telling you, we've got a nice size place here by European standards. It would be considered really tiny in the States because, as I always tell people about America, it's a big country. And there's, big-hearted people there who live in big houses, drive big cars, eat big meals, and have big bums, by the way. But regardless, you can see that the houses there, $500,000 over there will buy you a huge amount of property. It's absolutely incredible. And you can't really do it anymore. It's really wild what's going on in the States compared to other nations. And speaking of other nations, look at what China's up to. Now, we know they've had this tech crackdown for a while. That's been going on. Here's what's happening, guys. And, maximum respect to the Chinese. They do get a lot of bad press in the West for many, many reasons. I guess we need a boogeyman, right, to blame. Reminds me of the 80s when we used to blame Japan for all our troubles. Now we're blaming China for all our troubles. Well, the Chinese have seen the mess in the West that many of these industries have created, and they don't want any part of it. So I think this is absolutely awesome, guys, and you should ignore the rubbish comments in the news about communists and crackdown, all this garbage, right? They're restructuring their society for the betterment of people, and they're cracking down on big tech. Yep, I think that was really well done because look at the mess big tech has made in the Western democracies, and they're cracking down on other things like liquor, gaming, vaping. I have no idea about the growth hormone. I was going to Google it up before we started talking, but they're cracking down on this stuff. And it's absolutely incredible, guys, that they're taking these bold steps to ensure that their society continues to evolve in a direction that's beneficial to their people. So well done. I do like that. That's actually pretty cool. And we'll have to see what goes on further down the road. I do have a lot of faith in the Chinese system. And I do know that GDP on a PPP basis is bigger than the United States. And I've long forecasted that GDP is going to be larger across the board for China compared to the United States. And we know that's going to happen by 2030 or so. So yeah, they're trying to clean a mess up that happened. And speaking of messes, look at this. This is office occupancy. And we've seen this corroborated from other data sets. I'll bring some others in later on, but people just aren't returning to offices in the United States. Work is getting done. So a lot of this is work from home. The city centers, however, are having lots of issues because the people just aren't there. And of course, what that means is that city centers, because it all balances, doesn't it? So for all the complaining that people do about Dallas and San Francisco and New York, the city centers are dead and they're collapsing and they're dying. Well, guess what? City centers in the smaller towns or out in suburbia, they're doing quite well. So yeah, don't really focus and say it's very, very bad because the commercial landlords are getting killed in these city centers. There are commercial landlords out in suburbia and in the center of smaller cities, not these urban, huge places, big urban centers, I should say. No, there's smaller city centers and they're doing quite well. So you always got to look at it from both sides, right? And speaking of both sides, here's a tale about two cryptos. So we're looking at futures. We're looking at the basis for futures contracts for both Ethereum and Bitcoin. And check this out, guys. Lots of people are looking for the next big thing. And for many reasons, they embrace Ethereum and the futures. This reflects the views I maintain of institutional money because retail just doesn't generally trade futures contracts too much. It's nothing that retail really gets involved in, and it's nothing retail should get involved in. I'm pretty knowledgeable about derivatives overall, and I certainly know the math underlying futures backwards and forwards. I would not go anywhere near them because they're just too risky, right? But in any case, so this reflects institutional money, and we can see Ethereum futures are trading at a premium compared to Bitcoin. So it's a very, very fascinating perspective that some market participants are actually willing to pay a premium to trade into Ethereum compared to Bitcoin. It's a really interesting point of view. And we know that some other things are going on with Bitcoin. Now, this is being interpreted as bullish by many, but the amount of coins held on exchanges, of Bitcoin specifically we're talking about, is starting to rise again. So people are moving Bitcoin from cold storage onto exchanges, and I suspect what they're doing is they're anticipating higher prices so they can sell. As I've mentioned to you guys before, if you want to get rich, just buy Bitcoin and hold it. Don't trade it. Don't try to sell it, right? Buy and hold. And it's like the tortoise and the hare. You can do well. It just takes longer. It's lower risk, lower stress, and you don't have to worry. But it's really interesting that people are starting to move money back, or Bitcoin, I should say, back onto the exchanges. And as I said, they're anticipating higher prices down the road, as is this Dutch guy that we've talked about before, PlanB. So go on Twitter, you can find him, PlanB. He's got a very interesting Twitter feed, and he's got this model. Now, we've seen it applied to various commodities, for instance, lumber. I know it works with gold as well, and some other things. So he's applied the stock to flow model to Bitcoin, and he's predicting $100,000 Bitcoin by Q4 2021. I don't do those things, so don't ask me what my opinion is. I just know it's going to be higher in the future. How much higher? I don't know. I don't really care either, right? Fidelity, though, and if you check out my blog, FinTech Flash News, I just posted a story there. Fidelity came out with some really interesting research overnight, and they're calling for $100,000 Bitcoin by Q4 2021. A little bit different model, same outcome, same target zone, right? But the thing that really struck my eye, and I thought, wow, this is interesting, is that they're calling for $1 million Bitcoin by 2030, which ain't that far off, guys. So we'll have to see. Now, in any case, it's driven by all this liquidity sloshing around that's driving up prices for lots of stuff. And so much stuff, like we saw the $200,000 houses disappearing. Everything's getting expensive, guys. And because of that, some of my friends are actually calling this the everything bubble, because it's all in a bubble. We're in a bubble, life in the bubble. You enjoying it? It's okay. Just buy some stocks, buy some Bitcoin, sit back, just get rich slowly. It's really the only way to be sure. All right, guys, thanks very much for your time. I hope you enjoyed it. We're going to be back next week with another edition of Talking About Finance. It looks like it's going to be a good week in the equity markets. We got some Fed doubt off the table with Jackson Hole this week. So I think things are going to proceed pretty well. I haven't looked at the Gulf region to see how they're trading, but I'll take a look at it after I finish this. But I kind of get a good feeling for the week coming up. And once again, Bitcoin, very strong. And hey, let's see. Alexa, what's the price of Bitcoin?
One Bitcoin is worth 48,850 US dollars, down less than 1% over the last 24 hours.
My God, I can sleep well tonight. All right, guys, have a good week. Take care.